Hello, everybody. Thank you for joining us. Welcome to VRM Intel Live, online this time. We had actually decided to move this conference online anyway after the last one because we realized that we couldn't do a whole lot more of the regional shows after Destin and Gatlinburg this year. So we were trying to figure out how to bring this format online, and then it turns out that everybody has to move online now. So here we are. So now we're all talking heads like on CNN, but we all feel very famous right now. So really appreciate you guys being here. I want to, throughout the day, I think what you've gotten now is there's a page on the website that has a link to every single session. And then there is a cheat sheet that we sent out that is a PDF, that is an email that you've gotten, that if you can't find the page on the website, then you can find this, and it's also got the links to each session. So if you made it here, my guess is that you found that. If not, you're probably madly emailing Rebecca and Connie right now, trying to figure out how to log on. So anyway, what we're doing with these sessions is these are live. These guys are actually here on what is today, April 16th at 9:15 Eastern time, and in Europe much later. So I have with me Cliff Johnson, Jason Sprinkle, Tiva Mesa, and Simon Lehman. So what I'd like to do is have you guys just briefly, Simon, introduce yourselves, and then we'll get started on the content. Let's start with you, Simon.
Thank you, Amy. It's great to be here today. Simon Lehman, AJL Consulting. We're a boutique consulting firm in the vacation rental and short-term rental industry. I'm based in Zurich, Switzerland, and I have 3:15 in the afternoon.
That was pretty brief. Thibaut.
Hey, I'm Thibaut Masson. I'm from Rental Scale Up. Same time as I'm in Amsterdam, so same time as Simon. And Rental Scale Up, we publish content and videos to help property managers grow their business.
Hey guys, good morning. Jason Sprinkle. I'm up in the Panhandle in Florida, and I'm the CEO of Key Data, and excited to be here with you this morning, Amy. I appreciate you leading us as always and creating this opportunity to talk to everyone.
And hi, Cliff Johnson. I'm the former co-founder of Vacasa, but currently Chief Commercial Officer at Rented.com, and we work on revenue management across multiple continents, all types of markets. So seeing this data play out across a variety of markets right now.
So what I'm going to do, I just want to jump in. Simon, I know you've got another session directly after this one, so I want to get you in and out as quickly as possible. So looking at Spain and Italy and France, I just want to go to this Europe thing with you and Tiva. Really, what is the situation now? Are things closed? Are they closed for a while? What's going on? Well, let me start with you, Tiva. What's going on in Italy? Well, you've been in France, right?
Yeah. I'm originally French, still French. Yeah. So the situation
that hasn't changed.
Hasn't changed, even though I'm Caribbean French. It's a long story. All right. So the situation basically in France, Spain, Italy is a situation where basically number of infections and deaths are peaking, and the governments basically are talking about what's next. So I was looking at the different countries, and for example, the big lockdowns should end on April 26th for Spain, May 3rd for Italy, and May 11th for France. But what it really means, for example, if you take the case of France, if you want to, let's say, take your car and go somewhere on vacation, there's no way you're going to get a fine, right? You need to have to fill in a paper or fill in a form on an app to prove that you're going to either work or you have medical reason to be out there. And also what the President Macron of France announced a couple of days ago is that even though the lockdown will end on May 11, hotels and restaurants will not be reopening, and he did not give a date on when that's going to be happening. So that's the situation right
now. Simon, what's going on in Italy and the UK? I want to ask you that too, because I know you've been doing some work over there.
Absolutely. So basically, we're seeing the borders have come up again. So I think that's the first thing to talk about Europe in general. We have now borders again, full stop. What does that mean for the EU going forward needs to be seen, but we have borders in terms of each country handle it themselves. Now each government is watching each other. How are they coming out of the lockdown? In what steps are they coming out of the lockdown? And interesting enough, as people said and alluded to, the countries, the governments are handling it different. France had a very tough stand. That was a big surprise yesterday, that even hotels, not even a date when that's supposed to come back. Italy, they are now coming back to factories and construction sites. So there's a slow movement there as well. And in the UK, there is nothing happening at all. So it seems that the UK, they also don't communicate extremely well. So there's just guesswork in what is going to happen. UK is not as active and proactive as all the other governments. Maybe that has to do with Brexit. I'm not too sure. But let's not get political here. But it's interesting that the UK is really totally in dark. They don't know what's happening and what are the next steps. So, and then we have countries like Austria who have now started with shops opening, 15,000 shops opening this week. There was, 1,000-yard queues in front of shops with 2 meters distance. Only a certain amount of people are let into the shops. So Austria is now coming back. Switzerland is expecting to come back in a week as well, slowly, with shops opening, garden shops, bike shops, and others. Restaurants for sure, not for a while. But Italy will still. Italy has actually extended its lockdown by another 2 weeks because the government just really wants to be sure that the new infection rates are really under control or coming down until they will start loosening. When you talk to property managers, I mean, I spoke to a property manager in the south, in the Amalfi Coast, which is not a domestic destination, Amalfi Coast with Capri, that's very American and foreign traveler. He basically has written off his entire season, including summer and autumn. Full stop.
But same thing question. I mean, are you seeing the same thing, that people are just kind of writing off the summer at this point?
It's a great question. Again, I'm completely in line with Simon here. Look at another country, Portugal. Portugal, there's no ban on hotels and apartments. Yet, I was talking earlier today with a property manager in Portugal, and she said, well, there's no demand. And basically, if you look at different countries, I think like France, for example, has said basically, don't book holidays. Just don't book holidays because we can't guarantee anything. Or Spain has said, we'll be allowing people foreigners to travel, because as we know, Spain depends a lot on international guests as well, right? Much more so, I think Simon would confirm that, much more so than France or even Italy. So Spain said, yes, we're okay with neighbor countries like France and Portugal coming over, but we'll be limiting the countries coming. So it does mean that some property managers can clearly see that the summer will be not happening. So you can imagine, again, there's going to be probably, if you drive to destination, you're going to get people, right? But I think the first thing people will be doing is probably go see friends and family. That's probably non-paid accommodations. Or maybe they want to rent something to see family because they don't want to take a risk. If my mom's 92, I'm not going to stay at her place. I'll be renting a place, right? So just crossing fingers, everything will be right. But maybe for that reason, I would book a place. But so some people have started planning on this, drive to destinations that will be happening. I was talking to somebody in Croatia. Croatia, 90% of the demand is international, not domestic. It's a small country with a huge number of vacation rentals. Yet it's close to Austria. It's not far from South Germany. So it's a drive to destination that can welcome international guests. So they all expect it's going to be slow. With some demand that can be even from not just domestic, but just like countries around. But yeah, it's pretty pessimistic, I would say.
I want to compare the drive to regions in just a second. Before I bump off of this subject, here, lots of layoffs, lots of furloughing of employees, a lot of people out of work, and an interesting response to that from the financially from our governments. How are the governments? How are the workers there with the companies that you're working with in our industry, and how are the governments taking care of them?
Well, that's a great question, and you know, this is the revival of the socialists, you know, and we don't want to make a joke around it, but we're seeing some very strong statements right now in the government, and we are extremely treated favorably in basically all countries. Protection of staff, you know, that you can apply for short work, which means the people get still 80% of their salary, even if they're 100% down. It's all about job protections now. It's all about, you know, keeping a certain level of spending ability open and protecting jobs. And all countries are doing that. I mean, some are handling it stronger than others, obviously depending on the financial situation. But there is government aid, there is free loans from the government that you were able to pull. I mean, you know, Switzerland basically pulled out 40 billion out of the pocket. We're a small country, and everybody was able to claim 10% of its last annual revenue in an interest-free credit line for basically 5 years. We have all our jobs protected. We did not have to have layoffs. All the property managers that I'm speaking to, with the exception of the seasonals are the ones who are hit the hardest because they don't normally on the payroll because they come for the summer and go again. So obviously they have not hired seasonal, but all the property managers that we're dealing with are basically protecting its employees with government support and government aid programs. And it's been absolutely tremendous what Europe has pulled out of the hat. Incredible.
Yeah, and also to add to that, to Simon's point, I would give a number. Like France is a country of, I think, about 65 million people, and currently there's 4 million people that are under furlough, so have asked the help from the government. They think it can be 6 million end of the month. So it's a lot of people. And also to add to that, something actually, because it's also very interesting to think US, Europe, right? In a way, we are also, except Switzerland, of the EU. And on that, EU has been very slow at first, right? Actually, today, the president of the commission had to apologize to Italy who have been so slow to help out the Italians here. And I know the Italian property managers watching this will agree on that. So today, it's here an official apology. And I think the EU as well is going to help out with them for employees. I think for the moment, it's 8 billion. It's not as much, I would say, but it's helping as well. It's happening as well on the EU level, which is good.
When you guys hear about what's going on in the US, what do you think?
You want to start, Hugh, or should I? Well, I mean, we want to look. I mean, yesterday was interesting. We had Alessandro Paccio from Booking joining our call. He said, we're in a family now, so when we're a family, we have to be open. But we're shocked, and you're going through a horrendous mess. I mean, macroeconomical, I don't really want to know what the input is, and that's a pure fact. And what we're seeing in Europe, how this crisis is handled, and how your unemployment rates goes through the roof. And I've been part of some of the blogs and chat forums like STR Legends and others, and seeing what these urban guys are going through. I mean, this is war. I mean, you know, I know guys who have had master lease businesses who were literally selling furniture on the street just to make a bit of cash. And we are long away from that. And that is scary, and it's worrisome as well that an industry can be hit so hard. And this is why we're all talking about oxygen, and oxygen is not what we need to survive the actual virus. Oxygen is in a matter of cash what we need to survive as well, and I think that is ultimately going to change. I mean, I was literally shocked to have had friends that I've met in Cartagena at the end of January, and within 10 days of the outbreak of Corona, they were bankrupt, right? 10 days oxygen. And that for us was shocking and worrisome, because obviously, you know, from a global economy standpoint, I mean, the US is an important piece of the machine, and if that clog is going to be missing, then, you know, it will have a massive ripple effect on the global economy. I mean, we will go back into so much more domestic travel, and we already alluded on that before. This is all going to be domestic. Everybody wants to get out of the house as fast as possible, but as close as you can, just to get out, have a change of scenery, and just drive away for an hour or two, just be away from where you were for like probably 6 to 8 weeks. So the domestic travel will come back. Vacation rental has massive opportunities. International travel will not happen for a long time to come. And you know, who wants to fly in a plane to the United States and vice versa? No one. And this is not going to change very quickly. This will be with us for quite a while. I believe we could not be in a better travel vertical than vacation rental right now. But obviously we need to talk about standards, cleaning, et cetera, et cetera, et cetera. But we can rebound very quickly because we can cater for a base need of our clientele, which is now ideal for what people will be looking for once the lockdown is coming off. But we are very worried about the US for sure.
Cliff, I want to bring you into this really quickly. So looking at, and we are going to get into urban versus leisure a little bit more, but these companies that, like to what Simon's talking about, were pretty much out within 10 to 14 days. What do you think is the reason for that on the urban side? And if it's just the urban side, or are there leisure companies that we're not seeing who are also in the same boat?
No, it's both sides, and I think a big part of it is appetite for risk. And I think one of the biggest differences we see in the US versus Europe in general is there's a much bigger appetite for risk in the US, and people are willing to fly close to the sun and live on the edge, even though they have less of a social safety net, which is in some ways a really bizarre construct, you know. And so I think what we're seeing now, and we're seeing this actively through our own portfolio, where we have clients that have been in business for 15 years, operate with a reserve fund, have been through other types of crises, whether it's hurricanes, 9/11, recessions, and they're going to make it through on the other side. They're still going to have pain, but they've been prepared for this. And then we've had a lot of new investment in the vacation rental industry in the last 10 years, where the goal is growth at all costs. And where that's happening, there's not the next month's bills are not in the bank. The next month's bills are coming from the new revenue that's coming in. And so to Simon's point, like, a healthy business really shouldn't be able to go out of business in 10 days. If you don't have 10 days of operating cash, there's a problem anyway. But there's been a lot of pressure on companies to grow as fast as possible and gain market share as fast as possible. And that's when the merry-go-round stops, where those companies are being the first ones to fly off, you know?
Well, that's this whole idea, when the music stops, what happens? We've had this conversation in our industry for about, a while since I've known you guys. The music stopped. So where is everybody who doesn't have a seat?
I think the master leases are one of the most difficult, because either solution there is not a good one, right? Like, either you have a strong force majeure clause and you have a good reason right now and you can put that in place, but then you have no inventory left, you know, so where is your revenue going to come from? You have to rebuild it from scratch. I think what we've seen a lot is people trying to get some type of rent mitigation, where they're saying, hey, you're not going to be able to rent these properties out anyway. Let's just pause rent for a few months and see what happens. Most landlords are not accepting that, from what we're seeing, you know. And so that's going to be a continued challenge, especially in markets where there is still a long-term rental market. Now, this all happens so fast and furious that the long-term rental market hasn't expanded. If this becomes a prolonged recession, that market's going to expand, and that's going to be the replacement revenue for the people that have these urban market properties, you know. But they're all, either way, they're still going to be far below market. Luxury apartments were overbuilt in a lot of urban markets. And now that's going to, you know, so I think there's still going to be some opportunity there, but it's probably going to be on a commission basis and on a ad hoc basis.
Would you invest into urban vacation rentals right now?
Personally, no. Yeah, I think it's too uncertain, right? I definitely would not in terms of a master lease type situation. I think there is, on the flip side, an opportunity to help a lot of these buildings that are going to have a high vacancy rate with no revenue coming in on a segment of their inventory. So a commission-based option or something with lower risk, I think, could still be a good solution there.
No, go ahead. No, go ahead.
Adding to this as well, we also have to think about Europe, for example. You have this format, apart hotels, right? These buildings, they've been around for decades, and sometimes they belong to big hotel chains, and they do offer apartments in urban areas, right? But they are different beasts, right? Probably, I would say, because of the background of the company behind, and they've been through crises before, and as well, they do offer, for example, professional cleaning. So they could be the ones where you could argue they can maybe offer some kind of assurance to guests that it's a good place to stay, because that's the other thing to say about some urban market is that for some it will also be probably more difficult to also say that not only they are there, but they do offer a good cleanliness standards. So that's another point I want to say. It's not just the new short-term rental, those are the old players for some reason who could also play.
Just quickly to add to Cliff's point, very short. Would you invest into an urban player? I think the investors will come out of the box now are actually the real estate owners and the real estate investors themselves. There are quite a few companies now on the block, and we know of them, without mentioning names, who are looking for exits, and some very large ones. And investors are out there, and I think that the next buyer group for the urban operators, master lease or rev share models, are going to be the real estate investors themselves, for sure.
Are you concerned that the next wave of buyers for short-term urban are not savvy enough in operations for the product?
That could very well be. I mean, there are operators, there are real estate investors who have taken the in-house road, and obviously they struggle a lot more than giving their units to a professional operator. But I mean, there will be know-how around to make that happen pretty quickly. But that definitely will be a tough road for them to get around it, because in the past they didn't want to have anything to do with short-term, and they just did long-term. Especially the long-term operators, they've never touched short-term. But I think the real estate investors themselves can now insource that, and they will acquire that know-how with acquisitions and just bring it in-house, so they can manage the risk themselves. Because now they're sitting on master leases which are not served, because the companies are folding, so they rather sit on their own assets and manage that themselves, right?
Jason, you've been looking at a lot of data, and we're going to look at some of that in a minute. Leisure travel in the U.S. You're a property manager too, outside of your data hat. Right. When are you looking for? Have you given up on the summer, or do you feel like the summer is coming back?
No, I've not given up on it. And I just listening to the discussion of Europe and kind of juxtaposing that in a number of ways with what we're seeing in the U.S. I think for the most part, the U.S. hasn't given up, or the property managers haven't given up on summer yet. I think conversely, we're kind of all waiting with bated breath for any signs of hope. And I'm excited to share a slide or two that points to a little bit today, although it's very premature. But I still see signs that July is not lost in the U.S. data. It's hard to tell though. You turn on the news yesterday morning and you see everything from we're going to open up California next week. It's going to be 2020 before social distancing ends. So it's, of course, it's hard to guess what's going to happen anywhere, and it's particularly hard to guess what's going to happen in the U.S. So all we can do, from my end, is look at the data and see where is the impact already being felt, and where do you see, some signs that it's starting to come back. But from what I see, I don't think, it's fair to write off summer yet.
Cliff, do you think that leisure travel will change fundamentally? I mean, do you think this is a transformation in how people travel?
Yeah, well, I think there's definitely a property type component to this that's really important, and that something that Thibaut mentioned is that I think people are going to first come back to the properties where it's the most similar to the isolation they've become accustomed to, right? Where it's, I can leave my house, drive in my car, go to another place, and have a single family home. And this is another strike, I would say, against urban markets, is that people are going to be less likely to move a place where they've been confined into another dense market where their fears are going to be, reconfirmed, whether it's a condo building where they have to go in elevators or touch stairs or fly there, So just the minimal impact, the minimal contact that people have to have with a densely populated area is going to be a boon, which will help destination markets. So I think as far as fundamental changes, I think actually leisure markets stay pretty well the same. It's just where are you drawing guests from, which becomes different. And so it's going to start closest to you, and then slowly but surely you'll start picking back up. So it looks pretty similar to what we saw during the last recession, where, I mean, that's when we launched Vacasa. When we started out, like our Oregon coast visitors were largely from 2 to 3 hours away. As the economy improved, they started coming from further away, you know. And so I think that's, you know, definitely something that we're going to see continue. One thing that we're seeing in the US that I don't think you're seeing as much in Europe right now is artificial demand constraint for what's happening in April. So Florida is a great example. They banned vacation rentals, but not hotels. So then that pushes that demand for the people that are still willing to travel to another market. And as far as like a weird urban market anomaly, Scottsdale is still seeing fairly strong demand in April. And so that's, you know, it's a leisure and urban combine. And so that's, but they haven't banned vacation rentals there. So there's people that still want to go, but they're not going to banned markets. So some of that demand is then shifting to other markets. So it's a really weird dynamic.
So maybe on the point that Cliff was mentioning, the bans, it's actually happening in Europe as well. And what's very interesting is that, for example, in the UK this week, Airbnb is not taking any bookings. They've agreed not to do that, and they cancel the bookings. And so something you see across Mexico as well. So it's happening. And at the same time, some governments are, I think it's a good timing for them to introduce even more restrictions on, again, urban rentals. So sorry for urban rentals here if I sound pessimistic, and I share with you a more optimistic overview of our vacation rental, our initial markets. But for example, Prague has rolled out even more restrictions, and today Amsterdam has announced banning short-term rentals altogether. It's not even related to coronavirus per se, but I say its timing is good in 3 key areas in the city. So you do have also, and I don't know, Spain, for example, you can't even do short-term rentals, vacation rentals, short-term rentals at the moment. So I don't know how far into the summer this will go, because we did see in the US, in Europe, people very, very uneasy with having, I trying to find the right words, but people from the outside driving to the area, to the islands. So let's see how far it goes, because let's not forget also the locals pushing back.
Yeah, the travel shaming is what Amy Gastor first introduced to me as a term a few weeks ago. I've got to say, I'm surprised by it. I'm definitely surprised by it here in the US, in markets that every single person in that market is reliant on tourism. You know, that whole entire destination is. And yet these forums, these social media groups are, they're mean. I don't know how else to say that. It's mean. And so it's like, you know, they were going up to people at grocery stores and looking at their license plates and telling them to leave. I mean, people are, it's insane to me. Jason, I know you've seen it in your area a lot. Where is that coming from?
Man, it's a very protectionist attitude, I guess. You know, it comes deeply from the locals who just want to, I guess, protect from what they perceive to be a, you know, a higher incidence of disease elsewhere. You know, Florida's #1 drive market, to the surprise of many, is New York. And, you know, as soon as New York became not a great place to hang out in, as it started to spike, we saw rentals jump up, particularly in Orlando. And it was a very short order before the governor shut down vacation rentals in Florida, and, you know, decided he didn't want Florida to be the place for people to come and you know, ride out the wave. And they certainly didn't want the influx from New York. But I mean, we see it at the local level here. We see it in Destin, you know, angst against people from Louisiana coming into the state. And so, you know, I think you're seeing it everywhere. I think it's unfortunate, but I think it's just a desire to protect the home front, you know. And unfortunately, though, it impacts all the businesses in town, you know, that places like our home in Destin, Orlando, everywhere, you know, the restaurants, the shops, everything is dependent upon those visitors at this time of year. And it's deeply impactful. So it's a very difficult balance we're all going through, right, between preserving health and preserving the economy. And, you know, that's the challenge we all face, I think, trying to find that spot.
Let me ask you a question, Simon, about the shared space, the rent a room, rent someone's extra bedroom, rent their upstairs, that shared product that Airbnb brought to market. Is that, what's the future of that in your view?
Is there a future for that? I doubt it.
I'm asking.
No, I mean, You know, we're being brutally honest here, and it's obviously just an observation from the current moment, and you can always start to think about yourself and your desires and everything else that you have, and I think Jason just alluded to that, what's happening, and I guess we're seeing similar things here. I mean, people are scared. I mean, you know, I haven't left my house for 5 weeks pretty much, obviously just for a walk, and shopping we can do online, but if we have to go and get some fresh groceries and you're out there at the grocery store, I mean, it's not a pretty look. And you know, with the distancing and how people behave, and people are being rude to the people who work. I mean, how stupid is that? You know, the person at the cash register is actually doing a job, and they don't get even treated to say, "Hey, so great you're doing this job, and I'm so happy I can buy food," right? And I think coming from that, this fear. I mean, they did a lot of surveys out there, and I think the biggest fear of everyone is to anybody in the close family is being affected by it. That's the biggest fear by a long shot. And then I guess that's in the States not different. And therefore, you know, the sharing economy or sharing a space for living, I don't see a future for that for a long time to come, for sure.
And I have like a bit of a counter to that. And I would say that the shared housing, especially in vacation rentals, was never a threat to traditional vacation rentals or hotels. It's just a completely different category of travel that's largely driven on cost. So it's, you know, the people that couldn't afford to stay in a whole home or a hotel before still can't afford to, probably can't, even less so now, you know. So it's, as a niche accommodation, it probably will still exist. It just is a matter of, you know, how much are those people going to be traveling at all? It's early 20s is kind of the majority of that travel, you know, or people who are actively seeking some type of interaction with somebody during their trip. So it's just a different category altogether. It probably will take longer to recover just because of the social distancing guidelines. But it's something that I've never felt was a huge market from a revenue standpoint. And it's just what they found was just a different niche that was previously couch surfing was kind of the only option, you know.
Well, the reason it's important is because Brian Chesky in his last 2 town halls has basically said their focus is on the primary resident homeowner, not a second homeowner, a primary resident homeowner. So they're certainly not moving away from that product. Anecdotally, I don't see how it comes back anytime in the near future, but that's kind of why I'm asking. I'm trying to understand his passion for staying with that sector when a standalone leisure drive-to market that all of you are saying is the first to come back is probably a more profitable product for Airbnb.
From that perspective, there's no question the revenue potential is much greater. And that's something that's been the case for them really for 10 years now. But it's I think it's so hard for companies to move out of the initial product that got them started, you know. And I think I do still think a shared vacation rental is going to be a more desirable option than a dorm room in a hostel for people. So if they can get a similar cost.
Thibaut, are people still buying VC private equity companies? Are we still seeing investment in the space?
No, I must say that could be probably the better question for Simon on this.
So he's punting. So Simon, private equity VC, are we still seeing investment in the space, or is it on hold, or is it?
No, we obviously need to differentiate. We had a great session yesterday and talking about this in terms of, you know, we need to clearly differentiate venture capital and private equity. They're in 2 different situations. You know, one thing that private equity have is that on one side they need to safeguard their existing portfolio, and which is heavily suffering, obviously. But on the other side, they still sit on a lot of cash that needs to be deployed. So a lot of cash. I mean, a lot of these new funds, they still sit on billion of cash, which has not been deployed because it was very expensive. Everything was expensive pre-COVID-19. You know, with this economy that has been going up for years and years and years, it was very hard for them to find good targets at a reasonable price. And a lot of investment committees rejected deals because it was just too much risk to see if you can actually drive more value out of an investment. But now this is totally different. So the private equities are working day and night now to understand, which business will recover the fastest and where can we deploy now the cash that we're actually sitting on to actually make amazing returns once the business is bouncing back. So that's the private equity. On the venture capital side, that's going to be a long shot to go. So any property manager, technology company that needs to raise capital within the next 12 months, it's going to be impossible. And because the VCs have lost a lot more cash, there's already technology companies writing off. We have seen last week VRM disappearing from the market, merging with Fantastic Stay, and we will see a lot more of those. And these are all VC funded, so a lot of VC capital will evaporate. Anybody who had like a 12 months run rate prior to COVID has probably now a run rate of 3 months, maybe to a month, right? And raising capital in a month or 2 months time is going to be simply impossible. So in terms of M&A, so this is the VC side, and then on the M&A side, I think there's definitely opportunities now. Now there is still appetite. There's quite a few startups or even more mature companies who, first of all, have a solid basis, have enough oxygen to run through this. And we're now even at AJL, we get a lot of requests of companies telling us, hey, this is the profile of companies we're looking for. If you know any of them, we want to buy them now. Urban, leisure, doesn't matter where. So yeah, the ones who are well funded, they see this huge opportunity now to actually add acquisitions to their portfolio at a lower price, a lot lower price, obviously, and there is appetite for transactions. So this will definitely continue. We will see everything going to happen. We'll see bankruptcies. We'll see aggressive private equity moves. It's going to be interesting what is going to happen with SoftBank and the likes. But I think the others, they're in a good position to maximize the opportunity to buy cheap.
Jason, let's jump into some data. And also, we have got coming up where we have some more conversation about M&A activity. And also, I think there's a lot of opportunity for mergers in this space. I think that's an interesting, we haven't seen a lot of true mergers in our space. We've seen some fire sales and some asset takeovers, but nothing like what I think we could see that could actually make the industry better. From my viewpoint. But anyway, this data is something that Jason, you guys gave me about 2 weeks ago. But what it looks at is what the percentage of total revenue during these months in 2019. We also pulled 2018 to compare just to make sure there were not anomalies in this data. And it was pretty dead on, minus a Panama City hurricane in 8. So I think that. So what we're saying essentially, I'm going to move my talking heads out of this way so I can see this. So from March until May, this is the percentage of total annual revenue that that was seen during these months. And then if it's March until June, then it starts to go up. Then March until July, and then March until August. You see how it moves forward. Right now, if we are looking at what everybody's saying is true, and we're seeing this open, I know we won't see all of that June revenue, but do you think that these companies, based on what you know right now with timeline, Jason, do you think that there is some more room for optimism at this point than maybe we had a couple of weeks ago?
What was clear from this, and I give you credit for pulling the idea together. Obviously the data supports it, but the slide makes clear that there are certain areas that are impacted considerably more deeper than others. So back to Simon's point of kind of this opportunistic chance for M&A deals or mergers or whatever the case may be. There's some fundamentally strong businesses that are in markets that are looking at the loss of 80+% of their revenue per year, right? So it's not a matter, in many cases, of going out of business in 12 days. It's a matter of looking at a 12-month window out in front of you and having 80% of your revenue for the foreseeable future wiped off of the plate in a 10 or 12-day period, right? And so immediately you look at what so many companies have done, cutting costs and whatnot. And what the slide illustrates is that even if it goes all the way to August, there's some, parts of the country that are only going to be impacted, 47%, and there's other parts of the country that are going to lose 85% of their revenue. And so that's why, particularly when you look at those first slides with those areas in the red, the ones that are heavily dependent upon your peak summer and your spring break, that's why there's that bated breath out there waiting to see what's going to happen in July and what's going to happen to August. And I still think, there could be a potential upswing in the pent-up demand in the fall. But the market desperately needs some of July and some of August to survive, or these companies that got hit in the, literally the first week of spring break and have it run all the way through July are going to lose a full year's worth of revenue. And it's just, that's damning for any business, no matter what type of business you are, whether it's a restaurant or vacation rental. And so that's why you've seen the injury.
It was interesting to me looking at the mountain slide, Cliff, to ask you this question really quickly, that we saw a lot of layoffs and some furloughing in areas that March through May, this isn't that big of a deal in their revenue. Why did we see so many quick layoffs?
Well, yeah, if it happened a month later, it would have been a lot better for them in the sense that late March, spring break is still huge for the mountain markets, and they get so much of their revenue from those months is what carries them on through, they get a lighter summer, but they still get some revenue in the summer. So you're basically, what your reserves are on April 15th in a mountain market is going to carry you through the next peak season. So if you just slashed off a month of reserves, that might be your entire reserves, And so I think a lot of it came down to the fact of they just got one of their best months of revenue cut off in March, and they're not going to see that come back again for 6 to 8 months, And so they had to make decisions there because they couldn't carry people for that long.
She said March is our biggest month of the year! Exclamation point. So, but the other thing that hit Colorado was, a lot of them, the ski resorts just closed. I mean, like no notice, done. They check in people on the busiest spring break week of the year on Saturday and Sunday night. Saturday night, I guess, whatever day it was, Saturday or Sunday, the ski resorts just closed. I mean, that did cost a planet, I believe, in some of these ski markets.
Yeah, I think we were in
a
a unique position where you could furlough employees and have, for many states, those under 45,000 or so, be in a position to where they can make more money on unemployment for 13 weeks and still be able to bounce back. So I think a lot of people were looking at those as temporary cost-cutting measures, and a lot of those were furloughs as opposed to layoffs. But if you're going to make a change and cut costs, it's not good to sit on it and wait for a few months. It's better to act decisively and get it over. And I think a lot of companies, as Simon said earlier, were just in survival mode,
Jason,
yeah,
what
I
are we
would say
looking
it's
at?
really interesting. Oh, sorry. There was just two competing programs that came out, to Jason's point, where first it was this boost to unemployment, which made it look like the right thing to do for your employees would be to let them go and get that, as opposed to having uncertainty. And then the PPP plan came out, which is like, well, you've got to keep people employed and then you can get a credit, which if you can have people working for you and have a grant that covers people working for you, then that's pretty hard to pass up, right? But now that fund is dried up. So there's a lot of confusing decisions for managers to make, for a small company, especially where there's a really high sense of loyalty to their team and doing what's right by them. But.
Yeah, gut wrenching.
Jason, on this slide, what are we looking at here? And I do have it broken out so that we can see it a little bit more in depth, but just as an overview.
Yeah, perfect. So we talk a lot about paid occupancy and adjusted paid occupancy. Adjusted paid occupancy obviously takes out holds and owner stays. We're just looking at straight paid occupancy right now because the use of holds and the different property management systems is making the data a little weird, as you'd expect, along with all the cancellations and the movement of lots of data. So we found we get better accuracy in the last few weeks when we're looking at just pure paid occupancy. And so this is paid occupancy in each of these markets by week versus last year. So basically, how far down are we pacing, or in some cases in green, how far are we pacing up? And so I like the chart just because it's a very visual way of kind of saying, where does it look like we start collectively fading to green, and where does the pain appear or the bleeding kind of stop? And it's just a very visual shot. And what you see when you look through some of these is the markets that are more heavily dependent upon the, the peak summer seasons, you've got bleeding for a little bit longer and, more of a negative trail. But overall, I've kind of watched this chart and watched the red move to the right each week as we've updated it. And obviously what we're watching for is it's stopping moving to the right or pausing a little bit, and ideally at some point, God willing, shifting back a little bit to the left and having the greed start to invade July. But we've taken versions of these charts and drawn lines down them kind of where it shifts from a 10% to less than 10% impact. But in general, you can see that you've got, single digits as you move into July, and in some cases in late June. And so, back to the point of whether we're giving up, the initial question on summer. I mean, the consumer hasn't given up on summer yet completely. And so I think if you ask most property managers in the market, they're kind of watching this data and remaining hopeful or optimistic, if for nothing else, just for the, sanctity of their businesses surviving. But it's a balance. None of us want the disease, and all of us want our businesses to survive. So it's quite the struggle. And then this look is looking at occupancy pacing again. It's just a different view of it. And a lot of you have seen these slides before. I'll orient you real quick. So the dark gray line is just occupancy for 2019. And we're looking at paid occupancy, straight paid occupancy. And we're looking at January through September. And so if you just look at the dark gray line, that's just your traditional last year's occupancy pacing. And then the green line is where we were this time of year as of yesterday for 2019. So in other words, where we should be is the green line. And obviously the green and the gray line are a single line up until today, and then they diverge as bookings come on. The blue line, unfortunately, is where we actually are today. And so what we use this chart for is to look at the difference between the green line and the blue line, right? How long are we pacing below where we should be? And you can really see two things if you look at that difference from the dotted line to the right between the green and the blue. The first is the depth of the pain, how far down is the blue line from the green line, and then the second is the length of the impact. And everybody's blue line is at 0 right now, right? There's no traveling in Europe or the United States. But you can see where the green line is higher as of today, you've got a more significant pain point, like in the Florida Panhandle or the Hawaiian Islands, where we would expect to have a lot more of our year booked. And then you can also see a difference in kind of the length of the pain. Not as much in Lake Tahoe, where they're not expecting as big of a summer bump, considerably more in Hilton Head, beach-oriented type of markets like Florida Panhandle, Hawaiian Islands, even a little bit in Jackson Hole. But again, we're kind of just like with the red and green chart, we're watching the tail of this elephant's trunk or whatever you view it as, and we're hoping that the blue line starts to slide back in terms of when it crosses the green line. And, the impact is certainly into July at this point, although it's not completely lost. And so we're hoping that we'll see a slide back, and we'll start to see markets where, September, October are definitely ahead of last year, and even some markets where you start to see July above last year. There's another.
I'd say one thing, really important thing to look at in the data within your own set of cancellation data and future occupancy is how your cancellation policy plays into that. So if you have a policy where people can get a full refund up to 60 days out, you need to be proactive, reaching out to them and offering them a more flexible policy that can convert to a credit. So if you're proactive about it, it's going to be a much easier conversation than you'll see a wave of cancellations happening on close to the last day that they can cancel and get a full refund. Because we see a lot of people holding out for June and beyond, waiting to see what happens, but they're not going to want to get in a situation where they can't get refunded and have to battle with you. So I think that's going to be really key with a lot of these high dollar summer reservations, is just making sure you're proactive about keeping them on the books.
Absolutely. We're all kind of waiting before we jump into this for that, that tide to shift, if you will, where, I've seen a lot of articles that say there's 3 pieces of advice in this time of crisis: manage cash, and manage cash. And so, you've got cash flowing out the door with your cancellations, and everybody's just watching negative days pile up. And these webinars where we put slides up, all the slides look down and to the left, and my kids know what all that means. You don't need to even look at the X and Y axis. All the slides look the same. And so we're waiting for the tide to kind of go slack. And I think we're starting to see that. And the most frequent question I get every day is, are you seeing any signs that we've started to see, equality in the cash flow? In other words, there's not any more going out the door than what's coming in. And are we even seeing days where we're starting to see more bookings? And the last 2 days are the first days we've seen this, first time we've talked about it. So I'm excited to show it. It's not much. I don't know if it'll last. Every time somebody gets on the news channel, it seems to shift a little bit. But if you look at this kind of trend lines, this is just the last 2 weeks of bookings. And I intentionally didn't put the absolute numbers on the left because I think it's more important not to look at how many bookings we had in Colorado versus Oregon, but just did we have more bookings yesterday than what we had 2 weeks ago? And if you look at these 4 states and the next couple after them, there's a consistent creep up and to the right. And I'll let everybody infer their own read of it. But it's the first thing up and to the right that we've seen on any chart in 2 months. And so I'm just excited to see it and talk about it. And, hopefully it's a sign that the consumers are at least anticipating a brighter day in July or August. Hawaii and Southeast.
Staying at home with their children.
Yeah, that's right. They're tired of doing algebra.
If I could add something here, because I was checking VRM and Intel. I think already was it late March that Jason and Amy, you had come together to share this kind of data, the booking page data, or what you see in the market. That's really amazing. It was super useful to understand what's going on. And obviously, if you're Europe, I don't think, Jason, you have data for the European markets, right?
We have some, but not a ton.
Not as much. And so what's been interesting again is it's because a lot of people, property managers, are relying on some tools in shape or form, for example, to predict pricing, right? And now we back, so that's why talking about booking pace now, so what's happening, so this looking forward is getting more important now, it's kind of data. And I know there's although all the data vendors or people with data in the world, but a lot of them for Europeans have come up with like resources you can go and you can find on, I'm gonna name everyone, so fine, Transparent, all the rooms, Price Lab, Air DNA, they all have kind of resources where you can enter for your own countries kind of data for the booking page. And again, I think Amy and Jason were really the first ones who came up with this, say that's the metrics very important in the moment to look at. So it was great to see.
Thank you.
Yeah, I definitely think that pace data is something we were missing, in our industry, that forward-looking, non-historic view. It was certainly the vision that we sold to Jason. You're welcome.
Timing is everything.
Timing's everything.
It's critical to look at what's behind the data too, though, because if the trend is up and to the right, but yours isn't, what is it about your policies or your properties that doesn't match that? And so I brought the cancellation up. Another is cleanliness, like that people are paying extra attention to right now. So one of the things as we get into the nitty gritty when we're doing revenue management is looking at the correlation between cleaning scores and new reservations coming in and those types of things where, it's always been important. It's even more important now. But the cancellation policy has been clearly the biggest driver from new reservations that we're seeing.
Well, and to your point, Cliff, I hadn't thought about running the data to look at like the condo rebound versus the houses, in part because we haven't had a rebound to study yet until maybe the last day or two. But as soon as this kind of continues, hopefully, it's a great point. I want to go in immediately and pull and see if there's a differentiator between your houses that are more remote and the condos and whatnot. These are just two markets that had the most pronounced curve that I felt like I was comfortable given, even though it's a 2-week bounce back. Oregon, Orlando, both seeing, really enough of a significant rebound there that you can call it an effort to come back. We pulled just about every area in the U.S. and all of them had what I would call a slight turn up and to the right. None of them were this pronounced other than these two markets. But I'm hopeful that when we come back and look at this in a week or two, that most states will start to look like this. It certainly looked like most states were trying to turn up and to the right. So, hopefully a sign that bookings are starting and cancellations are slowing. That certainly seems to be not just what we're seeing in the data, but what we're hearing anecdotally. I do think the policies in terms of whether you're offering a refund or whether you're offering a credit are going to differ. And then one of the biggest things we saw in the data, and we've talked about it in some prior webinars, and Amy, you and I have talked about it a lot, but we saw a pronounced spike on 313. It was kind of our first chance to view a leading indicator. If you go look at the, those same charts that we were looking at before with the gray and the green and the blue lines to kind of look at pacing, on 313, there was a big spike in a lot of markets that showed, if you look at the US data, and I don't have the chart here with me, but it's on our website. But on 313, you saw a lot of the drive-in markets and a lot of the affluent markets really see a bounce back. And it was only a day or two that it lasted, but it was that day, that Thursday or Friday, when everybody stopped jumping on cruise ships on literally, like, it seemed like the same day, and everybody canceled their trips to Paris and to Costa Rica with the family, but they had to take the kids somewhere because it was the first week of spring break. And so all these families scrambled to look for something closer by that wasn't urban, that felt like they could still be in a home that was private and clean, but be in a home other than their own. And so we saw a lot of the markets kind of grab that bounce back. And I think that's probably indicative of the same types of markets that'll see a bounce back once we get to a little
Michelle
summer.
said, I was talking to her yesterday. She's coming up on a webinar with Sarah and Sarah Bradford and Tim Cafferty. She said that she was talking about your data yesterday, and she said that was the anomaly, that a bump that they saw as well. That she said it lasted for 4 days, but it was good while it lasted.
That's right.
So
Yeah, somebody said something about August, and then it fell immediately down.
I think it also created some of that backlash, where, oh, sorry, I was just saying, like, that was some of that backlash came from this surge in activity that came to the beaches. Like, I know for my properties in Oregon coast, like, the Oregon coast just got inundated with visitors, like, coming down because they had to go somewhere. And then they shut down everything.
Yeah, same with here. Florida looked like a spring break 80s movie is what I heard CNN saying, and then immediately we were shut down.
I think that's what Kathleen just read in. She said, yeah, but how many does actually came? All of ours canceled. And really, a lot of people had to cancel them themselves because they shut down the beaches and had to send people home.
Yeah, you got that first week of 100% occupancy, and then the second week was close to zero. So it was quite the.
Yeah, I mean, the locals got out their pitchforks and torches, and we were done.
That's right.
Another question is, Simon, who are the companies that are looking to buy companies?
Who's that from, Amy? No,
well, these are the big guys.
The ones with gas.
I think it's it's a good question.
A great company. Great company.
I won't mention names, but it's really about being well funded right now and seeing opportunities at getting good prices for companies that are either already in the process or decided that they want to get out of it. So I think it's all sorts. So it's not a particular breed, private equity backed, obviously, but they also have their challenges too. If you speak to a company like a Vacasa or a Sykes Cottages, I mean, they've been hit like everybody else. And as you can appreciate, their fixed cost structure is massive. So these type of size of companies with big cost structures, they're not going on a buying spree right now. They need to manage their operating cash flow. But then there's other companies.
Go ahead. No, go ahead.
There's other companies who have a lesser expensive cost structure, number one, and have opportunities to tug in acquisitions, and they're reasonably well funded. And for them, it's opportunistic. And I think to your point that you raised earlier, Amy, and this is really what we're seeing as well. I think this will now be an absolute revolution of franchise models. There's absolutely no question. Creating synergies, getting part of something bigger in terms of back office operation, in terms of distribution, in terms of tech. And I think this is franchise. You will see the guys who have a sort of franchise model, they will drive this super hard to get people in so they can reach their operation costs, be part of something larger, and then obviously merging and getting together. Actually, our company, AGL Consulting, we're running a project in one of the largest European cities right now to test the appetite of urban property managers to join forces. And we'll know some news about this in a couple of weeks to come.
I hate to do this.
On that, we're seeing. Oh, sorry.
No, go ahead. We got time.
Yeah, I was just saying, we're seeing rational buyers enter the market and local mergers as a much bigger potential. So, I mean, who is the strongest player in the Hilton Head, Outer Banks, those markets? They have cash, and when the multiples aren't 7x cash up front, they re-enter the market as a potential buyer. And so that we're seeing a lot more potential right now to merge local companies or get you know, a local buyer that has the cash to buy them out. But you're expect to get most of your payment in earn out right now with the uncertainty. So if you do want to.
Last rapid fire question. Is Silver Lake going to invest more money into Vacasa? I guess that's
I can throw, I'm not blocked from doing this, but we saw Silver Lake just put money in Airbnb, right? And they just put $320 million in Vacasa in October. I highly doubt they're going to just let it go, you know? So I would fully expect to see some additional investment there.
All right, you guys, I'll let you off the hook. Thank you for doing this early in the morning. I appreciate it. Or not, well, in the US, I guess late at night. It's happy hour in Switzerland and Amsterdam right now.
Oh, yeah.
Thank you guys so much. All right, we're going to take a restroom break, go to the next link. We've got John Banzak from Turnkey, Bob Milne from Vacasa. I wonder if he'll answer that question. And Tobias Wan from Oyo. So anyway, thank you guys. I'll talk to you in a little bit.
Have fun. Thanks.
Thank you.
Everyone.